All right, traders, the stock market has exploded and the VIX has crashed. SPY is currently up 3.05% on the day. And with that being said, I do believe in terms of this presentation that I prepared for you, by tomorrow from morning to midday, using what I'm about to share with you, I think we'll be able to determine if this is going to be a bull trap or is this going to be a bear trap, right? So is this going to be a fake pump and is SPY going to come back crashing down, having that gap close reversal? Remember, we spoke about that gap at 427.80s. It is now filled. Or is this going to be a bear trap and is SPY going to continue to squeeze up to fill the next gap? There's a gap to fill at 438. What this video is going to do for you is it is going to show you how to determine if it's going to be a bull or bear trap. It's going to show you how to determine where the price action is heading, how to determine if the bulls or bears are in control, and where the price targets are heading, right? So with that being said, make sure you stay to the end of this video. This is going to be a very important market updated price action analysis. I am also going to be sharing with you towards the end of this video the best setups I'm planning to trade moving into this week, which is going to be Amazon and Uber. Those are my top two stocks that I'm going to be watching heading into tomorrow, along with the SPY and the VIX. And I'm also going to be recapping the trades that were made today. In terms of today, I ended up making 3 trades. 2 were losses, 1 was a win. With that being said, I did end up finishing green because I had a very nice win trade with a decent size heading into the close. So I'm going to be recapping the mistakes were made. I'm also going to be explaining with proper sizing and risk management how you can have a green day even with a poor win rate on the day if you know how to scale in, maximize wins, average your cost down, stuff like that. So I'm going to give you some tips towards the end and share with you the trade recaps and some of the mistakes I made today. So with that being said, let's get right into the video. Make sure you smash that like button. So in terms of the SPY, let's quickly recap what happened. SPY, 52-week lows at 404. There was a gap to fill below at 405.41. As you can see, there was a gap to fill above right here at 418. It bombs at 404. It quickly rockets back up. It fills this gap right here, has a reversal as stocks tend to do when they hit their extremely low support levels, their low gap fills, right? You look for the reversals, bullish confirmation, and then it rockets even higher into the 420s. With that being said, history repeats itself. SPY bottoms at 52-week lows right here at 405.02. Forms the bullish candlestick, hence it continues to pump. And like I had explained to you guys in yesterday's video, I had stated that the VIX is extremely bearish, but it was a little confusing because SPY looked a little bearish too. But in terms of overall macro point of view right now, in terms of like overall price direction, you know, SPY's at 52-week lows and there's multiple gaps to fill above, right? And the Fed's gonna like to pump the market. And VIX is sitting towards 52-week highs not that long ago, and it always crashes at that level. So in terms of like where to put your money, in terms of like smart money, micro SPY calls, you know, easier said than done though, a lot easier said than done. But in terms of the video that I posted yesterday, we had stated that every single time the VIX hits this key resistance level towards the high of this channel, which is from the 30s, the low 30s to the mid 30s, and it forms dark blue right here, dark blue on the squeeze indicator. You can see right here, it forms dark blue, bearish candlestick on the daily, key resistance. What happens the day after it forms that dark blue? You can see right here, let me extend this for you so you can see this clearly. Right here, this is the day it turns dark blue. It's at key resistance, it had a massive pump, it formed the bearish candlestick. What happens after that? It sells off hard and it comes back down to fill this gap below. That happened once, and I'm going to show you again. Here's the second time. Right here, bearish candlestick at key resistance. It triggers dark blue on the squeeze. What happens the next day? It sells off hard. Here we go again. It's at key resistance. It triggers dark blue. It forms the bearish candlestick. What happens from an overall point of view on price action? It sells off hard. And here we go again. Yesterday is the first day it triggered dark blue. And look what it did. It sold off very, very hard, right? And it even had a gap close reversal right here. So, I mean, that strategy is absolutely phenomenal. I mean, just look at even right here. It triggers dark blue. It goes even lower the next day. So in terms of like where overall price direction was headed, that was the giveaway. And then also, you know, in terms of what the Fed did towards, towards market close. But I mean, that was the dead giveaway. And with that being said, in terms of how are we going to be able to determine if this is going to be a bull trap? So if it's a bull trap, what's going to happen is this is what's going to happen. You can see right here, SPY bottoms at 415. It pumps back up. It closes this gap at 428.51. And then it sells off very hard the next 2 days, right? That's a bull trap. Bulls get trapped at resistance if they buy. Now, in terms of a bear trap would be if SPY breaks out above this gap fill right here at 427.81, which has now filled. You also got key resistance right here at 429.64. So if SPY starts breaking out and turning that into support, that's going to be a bear trap. The bears are going to get squeezed, and what's going to happen is I'll show you exactly what's going to happen if this is going to be a bear trap and where we're heading. This right here is very strong support on the SPY. It's going to be at like $438. I want to bring some awareness to this because this is very important. $438, very strong support level. Once it cracked, just within a week, within like a week and a half, it dropped back to the 52-week lows. That's a big downside move, but it never retraced back up to the previous support, which is at 438. And one thing that the SPY likes to do is when it cracks massive support levels within some time, when you get those bullish confirmations, and we did get those bullish confirmations at the 52-week lows with the gap close reversal, and we got the bearish confirmation on the VIX, it does like to retrace back to the previous support. So your previous support on the daily, your strong heavy support, is at 438, and it hasn't retraced back to that. And you do also have a gap that is waiting to fill above on the SPY at 438. And you know the SPY, it likes to fill those gaps. It likes to have those reversals. And there is a gap to fill at $438 on the SPY. You can visually see right here, $438.06. So the point being is, SPY is looking extremely bullish on the daily. You have a gap to fill at 438, and it has never retraced back yet to 438 prior to having that big sell-off, which is something it tends to do. It tends, when SPY crashes these key daily levels and it sells off hard, within time, it tends to retrace back at 438, which is where the bears, because we know from an overall macro perspective that SPY's due for a new 52-week low and the bears are in control, right? So that's when the bears really step in and they try to turn that previous support into a resistance level. So if this is going to be a bear trap, we're headed to fill this gap at 438. That's when the bears are going to step in, look for the gap close reversal at 438, look for the previous support with the big downside potential to react as a resistance level. That means that they're trying to turn that previous support into resistance. Once it starts breaking down, write it back down to 428. That would be the best game plan I can give you for buying put options, is to wait for that 438 gap to fill. One of the issues that I'm seeing here is we got this gap to fill at 438. SPY is extremely bullish. You could say like, yeah, there is a triple top right here. Yeah, it filled the gap. It had the reversal. It's just the issue is right now it's so strong and it bounced hard off these 52-week lows, and the VIX still looks very, very bearish. We could potentially see like a little micro chop channel before it goes higher, but overall, because SPY does like to go back to those previous support levels before crashing even lower. So overall, I would say by like May 15 at the latest, we go back to 438. I think we can head to 438 by May 15 at the latest. Now, in terms of how do you actually determine though, if it's a bull or bear trap, how do you actually determine that? So I'm going to keep it very, very simple. This we're going to call it 400, and I'm going to draw some zones. We're going to draw some zones here real quick. This is going to be the bull zone. If this holds and turns into support, we're on track for 438. So your bull zone is going to be 429.64. That's going to be your resistance level. Now, in terms of your support level is going to be towards, let's just double check this here real quick. I'm going to use the 1 minute chart for this. Your support level is going to be towards 425.50. 425.50. That's going to be your overall support level. You could say 426.50. You know what? We'll go at 426.50. That's the level we're going to go with. So this is your box. If SPY breaks down out of this box, it's gonna be a bear trap and it's gonna really sell off hard. If SPY continues to trade in between this box and it keeps holding up, once we break above 429 60, 60s, that's when we're going to see that nice leg up, that nice move up to fill the gap. I mean, in terms of like how candlesticks are looking, we're looking fairly bullish. So, I mean, in terms of my point of view right now, it's either going to be a sideways chop where SPY pulls back and it just keeps chopping back and forth in between that channel, in between that zone, potentially even lower than 425, very realistic. But within time, it rockets to 438, which is most likely May 15, in my opinion, by then. The other case scenario is it just breaks out above 429s and it just really starts to rocket, something like this where your resistance was at 427 and it just really starts to rock and fill the gap. That's the other case scenario. So I would say, in terms of my opinion right now, worst case scenario for bulls in my opinion right now is it goes down, it sideways chops, but overall within some time, by May 15 I'd say, it rips back up to 438 because we're just due to retouch this previous support and we're due to fill this gap. And then best case scenario for bulls is it continues to micro pump and it rips, it maintains that zone. So it just keeps holding in between this zone. And then once it breaks above 429.60s, turns it into support. That's when it really starts to shoot up to fill the gap. So that's my honest views. That's my honest opinion on the SPY right now. That's what I currently think we're at, right? So in terms of like macro perspective, we're due for 438. And then once we hit 438, that's where we're going to look to buy the puts. In terms of the last Fed rally, SPY just really continued to rocket. And that's just what's looking like is going to happen right now. We could see a micro pullback from overall price direction. It looks like we're going to 438. So that's my thoughts. That's my analysis on it. You can use what I just said in terms of your trading plan. So if it's not going to happen for the short term, you want to protect yourself. You can, if you like, you can consider swing trading an in the money call option. And if it has a big drop, you can buy like one more contract to average down and just kind of hold those, give yourself about 2 to 3 weeks on those. That would be the overall best swing trading idea I would have for you out of this. So that's kind of the situation that we're in right now. So we'll see how it reacts towards the zone. I would say the make it or break it level is really going to be this 425.50. If 425.50 cracks, SPY sells off hard. If it holds between this zone right here, if it holds between this box, SPY is really going to be on track to break out, rocket, and fill that gap at 438 for the micro. If it cracks, I think sideways chop, and then within time, then it goes to 438. So that's the thoughts. So for the micro bull run to continue, I think we need to stay above 425.50s. That's key. If it cracks 425.50, we're on track for a crash to about 420. Overall though, even if it cracks, I would say we're due for 438 by May 15. That's my current views on the SPY. And that's how you can determine if it's going to be a bear trap. So like I said, if we really start to break down below this 429, and if it cracks 425, then it's going to be a micro bear trap. Overall though, my recommendation from here is, due to this bullish chart and how the VIX is looking, best thing you can do with puts at this point is going to be 438. So if you want to buy puts, and that could be a swing trade if it's bearish on the daily, if we get a bearish daily candle, if you want to buy the puts, wait till 438. So that's my thoughts on the SPY. In terms of the VIX, within some time, we're heading to 2265. It could have a little micro bounce. Overall, this is bearish. Within time, we're heading to 2280. How long can that take? I would say up until May 15th, right? So the point being is, if the micro doesn't work out, those targets that I gave you should work out by May 15th, in my opinion. That's when I think. So like 2 weeks max is what I would say. Now, in terms of the top setups that I'm looking to trade, Amazon is looking fairly bullish. We're due for a move up. This is a pretty bullish chart here. You got a nice clean double bottom. You got a lot of bullish wicks coming in here on the support channel. So if we can break above 524, Amazon is really going to start to run to this $2,600 level. So if we can break above 524, turn that into support, I'm going to look to buy some calls and ride this back up to about $2,600. Amazon looks very bullish for a swing trade. It also looks very bullish for a micro opportunity once we get that breakout, right? So again, call options on Amazon 2 to 3 weeks out is something you can consider as well. Uber, I'm really liking this for a micro trade. What we can potentially see happen. So like, again, these are my current views on the market. It's either this, see how this is a bullish candlestick. If it gaps down, then we're looking at like a sideways chop if it can't go above green. If we look bullish and we start going up, then we're just looking at a nice breakout, a nice micro run. But either way, they should go higher within time by May 15th. So in terms of Uber, I'm looking for a break above 28.20. If we can get a breakout above 28.20, 28.30, I'm looking to ride this back up to fill the gap above. A nice little trade on that. So that's what I'm looking for in terms of Uber. I'm looking for calls to play for the gap to fill above at 29.47. Once it fills the gap, I look to lock in profits. So those are the top two trades that I'm currently seeing. Amazon calls and Uber call options. Those are my two favorite setups at the moment. So with that being said, now we're going to start recapping the watch list and the trades that I made. So in terms of the watch list, in terms of the trades, let's go over this. So the watch list did have some very, very good trading ideas. The two key ideas from the watch list were these two at the bottom here: Facebook puts and Snap puts. Snap was the play of the day from the watch list. This was posted before the market opens. Snap, once 28.70 cracks, expect to drop to 28.10. So as soon as you see 28.7 crack, you can look to play the puts. This was a really good setup. What I saw in this one was I was looking at the 5-day charts. This was a great put opportunity before the Fed meeting. I was looking at the 5-day chart and I was noticing that Snapchat kept struggling. It kept struggling. It keeps forming lower highs, lower highs, lower highs. At some point, it's just due to Snap. And once it cracks this support at 28.50, this 28.50, 28 level, you got this big downside move here. If it cracks 28.10, which is where the target was at, then the next support level on the 5-minute chart is all the way down here towards your 27s, right? So Snapchat puts absolutely printed in the morning. This gapped down, and as soon as it turned that 28.70 to resistance, it formed some lower highs. It didn't go back to 28.7. It formed lower highs at 28.50. It just continued to sell off very, very hard, and it bottomed at 27.20. And if you look at the 5-day chart, Snapchat had big upside potential and a lot of support towards this 27 range. And the low of day was literally a dragonfly doji. This is the most bullish candlestick you can get. This gray candle right here, you see that at key support on the 1-minute frame. It doesn't matter what time frame you're using. If you see it, that's a very bullish trend reversal candlestick. And that 1-minute candle was literally the low of day. And then once that formed that candlestick, Snapchat had a major reversal to then fill this gap. And then when it filled this gap, it had a nice little micro reversal opportunity for puts as well, where you get in, you get out. But that was Snap from the watch list. And then Facebook, if 211.5 reacts as a resistance level, then it's said to buy the puts and ride it back down to 207. This was crazy. If 211.5 reacts as a resistance, expect to crash to 207. The low of day was 206.96, so the target was 100% accuracy. The reason why I didn't buy puts, so like I tell you guys, when they gap down, best entry is at the previous closing price. The reason why I didn't buy puts is because we didn't hit the previous price. So just to understand, if you do buy puts before it hits the previous closing price, right? Because some people might be viewing this and they're saying, oh man, I missed out on such a great opportunity because I was waiting for the best price. And it's like, yeah, but there's going to be times where it hits the best price. And if you get in before the best price, you're going to get squeezed. And you don't want to get squeezed on options, especially early in the morning. I mean, one thing you can consider if you're just very, very bearish on the overall day and you're comfortable with holding, playing for a bigger move, you can take a smaller size, take a starting position, and then if it rips against you and it starts to look bearish, you can scale in. That's something that I'm going to start doing. I'm going to start working on scaling in in averaging into contracts instead of just doing the full size I want to do right away. I'm going to start working on scaling in. And in terms of like that scaling, it'll probably be like 50 to 60% of the size I want to take. So if I want to put $1,000 into puts, I'll put in like $500 to $600. And then I'll leave the rest that I want to put in, the extra $300 to $400, I'll leave the rest for averaging down if it looks like it's in my favor, or even averaging. I don't like averaging up, but I'm willing to average down if it goes against me, as long as we get a bearish reaction and as long as I'm not like getting stopped out. So that's one thing you can do where you can let your loss run a little bit more, is you can scale back in your position size. That's something I'm going to work on doing. But in terms of my timing, it tends to be spot on, and I cut my losses extremely quickly as well. That's something I really am good at, is cutting my losses extremely quickly. But I do want to work on scaling in more and averaging down a little bit, not doing the full size I want to do right away, giving it some time, and then once it sees resistance. So in terms of like examples, what was the confirmation to buy puts before the previous closing price? If you look at the chart yesterday, the previous closing price was right here at 211.13. You had strong support, strong wicks. It gapped down, had a quick pop, bearish candle right here, formed lower highs, trying to break down for new low. So in terms of confirmations to be buying puts before the previous closing price, was this pin right here, this green bearish pin at that previous support, at that other previous closing price from yesterday. And then also these lower highs right here. These were all confirmations to be buying Facebook puts, and they did sell off to 207, so they did print. And then once it hit my target at 207, they started to rocket. So that was recapping Facebook from the watch list. Now let's quickly go over the trades. So in terms of the trades, it was 3 trades today. I played a Visa put option. In terms of what was the mistake that I made with Visa, the mistake was I bought puts into the dip. So in terms of Visa, it actually gapped up. This technically gapped up today, and there was very strong support. There was very strong support right here. Let me show you on the 5-day chart. You have a lot of support on Visa at $207. A lot of support, big upside to 212, right? So the point being is I literally bought puts at the support right at market open. In terms of the strategy that I teach, there was no strong reason to be buying puts because it wasn't a gap close reversal play. The reason why I was buying puts was I was playing for the gap to fill below. And again, these are quick micro trades, right? I'm not holding these through the Fed meeting. But with that being said, I was playing for the gap to fill below. There was like a gap to fill below at 201, and we had a lot of support on Visa towards this 200 and $207 to $208 level. A lot of support. So the problem was I bought puts into the dip. You want to be buying the puts into the rip, right? So with that being said, as soon as it started going against me right around here, I got out for a 25% loss on the contracts. So that doesn't mean that I lost 25% of my account. That means I lost 25% on the contracts. So on like a high confidence setup, I'll put in like 10% of my entire account, and I'm trying to risk like 1 to 2% max. So if the option goes against me 10 to 20%, if it goes against me 10%, I get out, I lose 1% of my account. If it goes 20% against me, I get out, I lose 2% of my account. That's typically what I like to risk. So in terms of my max risk, it's typically 20% on the option contract. So if I'm down 20% on the contract, I will typically get out. Now, if I take a starting position, and this is something I want to work more towards, is trying to take more starting positions. If I take a starting position and I'm down 20%, I'll hold it a little bit longer if I strongly feel it's going to be in my favor for the day. If I really believe it's going to go in my favor within time, I'll hold it a little bit longer, because since I took a starting position, it's not going to affect my portfolio, right? It's not going to affect my portfolio as much, so I can scale into it once it starts to go in my favor and average my cost down, right? I don't average my cost up, I average my cost down if I'm in that particular situation. That's something I want to work more on. But this was just a classic example where you could see right here, you got resistance at 211. It had the morning rip towards 211, and then it just fell off a cliff and it hit 205. The puts absolutely printed from this. I mean, I'll show you an example. Say you bought a $210 strike, just to show you like the capabilities like of these option plays. At the lows, these were sitting in the 3s. At the highs, they were sitting in the mid 5s. So that's like, you know, we're talking about like a 60-75% return within the first hour. So they had the potential to do it. One thing I'm gonna start doing as well, this is something I would encourage you to do as well, start looking at the contract that you're interested in and look at the daily chart of it and figure out, okay, where's the lows of these contracts? Where's the highs of these contracts, right? Because we're trading the charts, but what we want to do is we want to also trade the contracts. We want to understand what's a good price to buy this contract. What's a terrible price to buy this contract? And you can just visually see for the past 3 days, a terrible price to buy these contracts for 3 days in a row was in the 550s. So that gives you kind of a confirmation on when you can potentially look into a call option. So just keep that in mind. I want you guys to start focusing on the price action of not only the chart, but of the option chain and of the price of the option contracts. Start looking at the daily chart of these options. Like for example, if these puts go to 1190, I'm probably not even gonna trade the chart on Visa. I might just buy calls. If these puts explode to 1190, I'll probably just buy some Visa calls because history shows this went from 1190 all the way down to 90 cents rapidly. So why not try a put and just trade the option chain? So that's something I want you to encourage you to do. I want you to start combining the charts with the contracts you're interested in. Start looking at the daily chart of the contracts and figuring out, okay, this is a good support level to be buying. This is a good support level to be buying. This is a good support level to be buying. This is where the resistance has been, right? This is going to give you a better understanding if you're getting a good deal or not, right? So that's something I really encourage you to do. Start using the daily chart, start using the 5-day chart on the option contracts. It's going to drastically improve your entries and exits on the contracts. We got to start trading the price action of the contracts, not just the charts. So that's something I really want to get through to you guys because it is going to help us enter and it's going to help us really understand where these reversals can potentially happen. It's going to give us these key opportunities. Like right here, I mean, there's a gap to fill above on these contracts at 1195. So if all of a sudden they shoot up to 1195, why not buy some Visa calls on these puts? So I want to preach that as well. So that was the recap on Visa. Due to my poor entry at heavy support, I was not able to hold through. I had to get stopped out. Now, if I had recognized, okay, I have a shit entry, right? My entry is not good. Let me take a starting position, and I'm well aware if it bottoms here, it's going to rip to here, which is 210 to 211. So I'll see how it reacts, and if it starts pulling back at that resistance like it did here, then I'll just average my cost down. But if you're already in the position size, the size that you want to take towards a bad level, you can't do that. You can't hold through and see that reaction because the loss is going to be too big. The risk isn't going to be worth the reward. So just understand, like, if you get a poor entry, you should just exit the trade. But if you get a poor entry and you're doing a light size and you understand, you know what, I'm playing for a big move, I'm comfortable with getting in here because I feel like it's going to go a lot lower throughout the day, but it could have a little morning rip. So if it has the morning rip and we see bearish candles, then I'm going to scale into my size, right? If you're going to do it that way, then you got to start off with small size in order to do it. Otherwise, the risk is not worth the reward. So that's my thoughts on the Visa trade. And I got out of that very, very quickly. Some people made money on that because, they waited and they got a better entry. And then VERU. So in terms of VERU, these contracts took a hit. This was by far one of my worst trade alerts in a while, but my exit was fucking amazing. My exit was so good on these. So in terms of these VERU puts, I bought these puts at 9:36 a.m. And then I sold them. I got stopped out right here at 10:01 a.m., right before these puts absolutely got crushed. Now, I want to go over this because it's very important. So in terms of VERU, I had a 25% win on the contracts yesterday. Today on the contracts, I lost only 8% on the contracts. So I technically made more percentage-wise yesterday, but unfortunately I had a bigger size today. But with that being said, it could have been so much worse. Those contracts were down like 80% plus. It could have been so much worse, but I got out at the perfect time. So I'm going to show you the mistakes that I made with this trade. So, we have key support right here at $9.60 with big upside potential, right? Once it cracks that and turns it into resistance, you're looking at big downside potential. So I was playing for the second red day. You can say I chased it and this wasn't a phenomenal setup. The biggest problem with buying put options when a stock is breaking down and it has big upside from that prior support, the biggest issue is you don't want to do it if it has light volume, because if someone buys in with heavy size, it's going to squeeze the stock up like crazy. And even if it goes down and that doesn't happen, it's not going to go down that much because the volume is so light. It's just going to chop. It's going to theta decay. So the biggest issue was the volume was extremely light when I bought those puts. And that could work towards the top, towards the resistance of the channel on the first red day, but even that's challenging. It's just the way the price action is. But if you do it at key breakdowns, at key support, it's just not going to work out. So if you're playing a key breakdown and the volume is too light, don't play it. That's my number one recommendation. You're exposed to too much risk of getting squeezed. And even if you're right about the sell-off, it's going to chop around. It's not going to crash as big as you want it to. The theta decay is going to hurt you. So just stay away from light volume plays. Stay away from light volume key breakdowns. Even if they look bearish, just avoid them, right? If you're shorting the stock, that's a different story. You can get in, get out. But with option contracts, you got to stay away from this chop, this theta decay. But VERU had a gap down. It filled the gap at 888. Right, which was towards that previous support yesterday, and it had a reversal. And I got in at 9:36 a.m., which was right here when the price was at 870s. It dropped all the way to 854. At the peak, I was up 9%, but the theta decay was hurting these like crazy. And then check this out, the same candlestick, which was the low on that other stock we went over, I forget the ticker, but we went over it earlier in this video. What was it? Was it Facebook? Possibly. Let's see. Was it Facebook? It might have been Snapchat. It was Snapchat. It had to be Snapchat. Yeah. See, look. Snapchat formed a Dragonfly Doji towards key support. VERU, as soon as it formed this Dragonfly Doji, look at that bullish trend reversal candlestick towards support. It started sitting, and then all of a sudden, this huge volume spike came out of nowhere. 137 on the volume. You have big buys coming in. And then it starts to micro sell off. And then in terms of my exit was right here. I got out at the perfect time. If I didn't get out at the time I did, I would have been down 50% very quickly. So with that being said, I got out at 11:14 a.m. So 11:14 a.m. is where I got out, which is right here. Here's where I got out at 11:14 a.m. Why did I get out right here before this exploded up and went red to green on the day? So remember, I bought these puts at 870s. I got out when it hit 880. So as soon as it hit 880, I got out. And it was an 18% loss. As soon as this exploded up into the nines, the contracts got wrecked. They were down 50%. It wasn't a good entry. And I would have been able to determine if it wasn't a good entry if I were to study the option chain of the daily chart and not just the actual chart. I mean, if you go back to the 8.5 contracts, the contracts that I was buying, which were also out of the money, which made this trade even 10 times tougher because I was buying an out of money contract, I would have stayed, at the money, but it didn't have an at the money strike. But if you look at the daily chart on these, you could see 69 cents all the way down to 30 cents. And then today it bottoms at 15 cents. There's a gap to fill below. And it tops out at 60 cents. The high was at 65. I was buying at 55 to 60. But you could see as soon as it went from, which was right here, as soon as it went from red to green on the day, which was right here, as soon as I got out, I sold it at 50 cents right here. These contracts took a big hit. They went all the way down to 15 cents and then they ripped back up to 40 cents and then they closed weak towards the lows. So you have to exit very rapidly in a situation like that. But this wasn't a great trade. It wasn't a great trade to begin with. I should have stayed away and not chased it. I kept wanting to buy puts because the chart just looks so bearish and you have the downside potential. But the issue on this was the volume was too light. And in terms of identifying trend reversals, how did I know to get out before those contracts took that massive hit? I could have lost 50% on the contracts within a couple minutes from holding, from where I exited. How did I know to get out exactly there? Because I had determined that there's support at 874. If it goes above 874, you have a rapid spike to 925. Do I want to hold from 875 to 920? No. So if it pushes above 875, I cut my loss, I take my L rapidly because I'm aware it can spike very, very big. Plus, I don't like the way it's moving. The volume has faded. They were looking very, very hopeless. You had the Dragonfly Doji, you had the rip up right here with the big buys, and you had the higher support. So as soon as it broke above that 875, which was my max risk, and I'm able to determine that max risk because I'm telling myself, this 875 level, if we go above it, we're going to see that shift and we're going to see that big spike come in. And then there was the big spike. So with that being said, that's how I was able to determine my exit so quickly. I know my risk and I'm not willing to risk that move. I'm not willing to risk that box right here. This is why you have to learn how to trade the price action, trade the chart. I'm not willing to risk more than the low of this box. This is a massive crash, and this is a massive support level. It cracked the support level, but if it goes back above that support level, I'm not willing to risk the high of that because the contracts are going to get absolutely wrecked. So that's how I knew to get out very, very quickly and rapidly on those. And that's something you have to know. You can't just blindly follow anybody's alerts. So I wanted to bring awareness to that because that's very important. With that being said, that was the recap on VERU. And then my last trade actually put me green on the day. So I started off 2 reds on the day. If I were to hold Visa, I would have done very well. Unfortunately, I was patient with the wrong stock. I was patient on VERU and not Visa. It happens when you enter 2 trades at once. So anyways, at 2:14 p.m., I bought SPY puts. I had a 418 at the money strike. I got in at 268 on these. So this was a nice scalp. But you have to sell super quick. You have to get out super quick. So in terms of SPY, and the reason why I bought puts for a quick micro trade, the chart just looks so bearish and it looked like a little micro crash was coming. So those were alerted right here at 2:14 p.m. So if we go to 2:14 p.m. and we pull up the 1 minute chart, so in terms of 2:14 p.m., let's highlight this here real quick. So in terms of 2:14 p.m., we are right here. I alerted these puts right here at 2:14 p.m. As soon as I got in, and I got in towards the high of this 1 minute candle. Why did I get in towards here? You have the bearish trend reversal candlesticks coming in. This looks like a def double top. It looks like SPY wants to sell off. You have previous support right here reacting as resistance. See the bearish wicks, the trend reversal candlesticks. So I felt SPY can have a little micro sell-off. And it dropped from 418 all the way down to 415s very, very quickly. And then it went even lower. It dropped all the way to 414. So in terms of my exit, I exited right around here is where I exited, and then right around here as well. So I made a 30% return on those. At the peak, I was up 100%. At one point, I was up 40%, and then I went to break even, and then I was up 100% holding through this move. Right here when I entered and it sold off here, I was up 40%. It ripped against me. I went to break even, and then I was instantly up 100% within minutes. This crazy move here was absolutely insane. And then this is when the Fed started to, pump the market with the tools and inflation and all that stuff, right? So with that being said, that was the quick trade I made on SPY. It was just a very quick entry, quick exit. There was a lot of major resistance here towards 418s as well. But that wasn't some sort of great strategy. That was purely just trading price action in the intraday chart. You guys know I've been saying just wait for the gap to fill at 427.81. And then once the gap filled, I told you guys we can't buy puts yet. because this is still bullish and it's too strong. So we got to see how it reacts tomorrow. If it starts to break down, turn red, react as a resistance, we could try puts. If you do have SPY puts, whatever you do not risk more than 429.64. If you risk more than 429.64, even if this gaps down tomorrow and goes from red to green, if you risk more than 429.64, you're exposed to 10 points of upside. Because I'm telling you, we break above 429.60, break above 430, we are headed to 430s, no matter what SPY did before then. So just keep that in mind. So that's my thoughts. That's my analysis on the overall market trend direction. So I hope you found this video helpful. Make sure you like and subscribe for more updates to stay up to date. If you do want to be a part of my private group, Trader Society, the team, that's going to be the first link down below in the description. Once you join Trader Society, you get instant access. It's a lifetime access program. It's a one-time fee, right? So you're grandfathered in for a lifetime. And in terms of what's included, it is all explained on the first page. So you just click that link down below in the description, watch the short video, read everything on the page. It's going to explain to you everything that's included and if this is going to be the right program for you. Just to give you some information, you do get access to the video lesson library. Within the video lesson library, you learn how to trade price action. You learn how to trade both ways. You learn the supply and demand zones. You learn what your risk is if you continue to hold, what your reward is if you can continue to hold. You're going to know when to get in, when to get out. You're going to know exactly what it is in terms of price action, where the stock price is heading, if a stock reacts this way, if a stock reacts that way. You'll understand exactly how price action works. So if you're really looking to learn how to trade these unique gap trading strategies that we're using to consistently make money, if you're really looking to learn how to trade the charts, how to trade the options, how to trade the price action, this is going to be the right fit for you. And our group is dedicated, the chat room that you also get access to, is dedicated and laser focused on trading these gap trading strategies at the best prices. And we're trading these both ways. So with that being said, you get access to that video lesson library where you learn the gap trading strategies. You also learn risk management, position sizing, and psychology and mindset training within the program. You do also get access to the chat room where you can add us a friend on the Discord, contact us one-on-one. And you get to surround yourself with that group. We have 6-figure traders. We have one guy who's worth over 9 figures. And you get access to surrounding yourself with that price action, with that analysis. There is great analysis within the chat where you can make some great trade ideas, pick people's brains, and really understand the education, understand the charts, understand the price action. There's a lot of great trade ideas within the chat, right? Just make sure you don't blindly follow anybody. Use it for educational purposes. Use it to your advantage to understand where prices are heading, to understand how these strategies, how these patterns work. Within the chat, you do also get access to the stock analysis, the real-time updates during pre-market, during market hours on the stocks, right? And you also get access to the watch list that I post where you can use to trade self-sufficiently to win within the markets. There's plenty of great trade ideas within the watch list if you've been watching these videos. You do also get access to the real-time trade alerts, not for you to blindly follow, just to understand what it is that I'm trading in real time so you can see it. If you're just here to blindly follow mine or anyone else's alerts, you're not going to make it. Trading is not that simple. You have to actually learn how to trade before even trying to enter someone's alerts. You have to really learn and understand what it is that they're doing so you can observe, throughout the alerts, and you can look up the charts and you can really see what that person is doing. You can ask questions based off of that, right? You can study that real time, that history of everything within the chat room is very, very valuable. You do also get access to, and this would be the best thing in my opinion, the live trading streams that I do every single day at Market Open. You watch me trade live at Market Open. I mainly trade just the first hour of open, and then I'm typically done, aiming for that 2 to 3% daily goal, compounding my account. You get to watch me trade live at Market Open. You get to see my open positions when I close out. It's all within real time. You can watch the recordings of the live stream if you want to learn from it again and rewatch it. Or if you missed the stream, you want to watch the recording, right? It's all stored within the video lesson library vault. And you get access to those live trading streams where you get to ask me questions live on spot. So there's a lot more to it. You can get started as soon as you sign up. Trade live with us tomorrow at Market Open. I'm telling you, tomorrow's going to be the day where we determine, in terms of price action, tomorrow's the day where we're going to determine if this is a bull or bear trap, and then we can make trades based off of that, right? Tomorrow's going to be the day. So if you want to be with us, the opportunity is going to be that first link down below in the description. excuse me. And I will see you guys tomorrow live at market open to trade with you guys. I will see you guys tomorrow live at market open. Also, the watch list will be posted. The written version with the updates with the new stocks will be posted at market open right before the market opens tomorrow. So yeah, thank you guys so much for tuning in, and I will see you in the next video and the live trading stream tomorrow.